Hello fellow traders, Marv Eisen here from Timeless Dollar Trading Academy, and in today's video I want to talk about trading the predicted range and how to use the predicted range in order to determine whether or not to make a trade. So here's the chart for Monday, July 21st, and I'm going to take you through July 21st, 2nd, 3rd, and 4th, Monday through Thursday, okay? And so let's talk about trading the predicted range. Now, one of the things that you need to know is that Mondays, Wednesdays, and Fridays generally favor markets going up. Tuesdays and Thursdays, a little less predictable for markets, for price action anyway. So here's Monday, July 21st, and let's start the action just before the market opens. And I have my trading zone drawn out, 63.61 resistance and 63.23 support. Predicted range of 39 points. And notice the prices come in just about at the middle of the calculated trading range. Now, I really don't recommend trading when prices come in at the middle of the calculated trading range. I've made previous videos about that, but let's take it through today, Monday, July 21st. Okay, I'm going to stop the video right over here. And right over here is just about 10:30, okay? A little after 10:30. And the predicted range was 39 points. So if we clone our calculated trading range, and there are 4 points between each horizontal line on this chart, only 4 points, all right? And so I'm going to clone the trading range to the intraday low, because at 10:30, of course, we could see that the intraday low was put in at the open. So I'm going to clone the trading zone up here, and we can see our trading range ranged up to, gave us a supposed range at 39 points of 63.82. Possible range for the day. But prices at 10:30 traded up to 63.72. So 63.72 left us about 12 points short of the predicted range. And so would you take a trade at this point where prices opened in the middle of the trading zone if you waited? Now, of course, if you determined that prices were going to continue going up, if you see there's a bias to the upside, and of course it's Monday, so Monday tends to favor prices moving up, you can hop on and maybe make yourself 10, 12 points. Maybe grab 10 points on Monday, July 21st, which would be fine for most people. Really, it would be fine for most people. Okay, so now here's Tuesday, July 22nd, and let's take it from just before the open, prices opening up or moving in to the predicted trading zone below that trading zone. And let's take it again. These are 4 points between each horizontal line. I'm going to stop it right over here. Why did prices take this big plunge? You have to always question when prices open up and they take big, sharp moves, momentum moves, to the downside or to the upside, what caused it? And so what are you going to do? Here it's about 10 o'clock, okay, right over here, 10 o'clock. Prices have already gone down from 63.48 down to 63.22, about a 26-point decline, okay? 63.48 to 63.22. So what are you going to do? So again, the predicted range was 34 points. So let's clone our trading zone to the intraday high, okay? I'm going to clone it. Remember, the subject of this video is trading the calculated trading zone. I'm going to move it to the intraday high right over here. And so the trading zone, if I clone it, was right over here with the low put in just about 3 points. Let's see. The transposed low is 63.15 and the low is 63.90. All right, about 4 points from the low. So at 10 o'clock, do you trade this? Do you trade this? Market has already put in the bulk of the trading zone, all right? All but 4 points of the trading zone. So would you trade it? Maybe you leave it alone. But if you want to stay with it, you'd say, well, the prices are going to go lower because the trading zone, right? The trading zone is 34 points, predicted range. The predicted range of the trading zone is pretty accurate. Now, I know that Monday the trading zone prices only traversed about 75% of the trading zone, but the trading zone is pretty accurate. If you've seen my previous videos, you know the trading zone is particularly accurate. And so here the prices put in about all but 4 points of the trading zone. Are you going to trade it to the downside? Are they going to go significantly lower? Are they going to just stay at the bottom of the trading zone? It's only 10 o'clock. And so let's see where prices move the rest of the day. And look at where prices are hitting a bottom at around 63.20, 63.19. Let's move forward a little bit. So remember, GST, TMC, gap support and resistance, trend, time and price, momentum and candlestick. And so the momentum trades, you really can't determine when they're going to happen, how long they're going to be. And so prices began moving upwards after 10 o'clock. And so prices, would they traverse the entire trading zone from the low? So let's clone the trading zone again to the low. I'm going to put in another clone, okay? And I'm going to move it to where the low was, right over here, okay? Put it right over there. Okay, and if prices are going to move back up to the transposed trading zone, let's see what happened. Well, what do you know? Okay, so prices moved up to the transposed trading zone from the intraday low. Took them a while to get there. It took them till like 1:30 right over here. And they did close there as well. But the transposed trading zone, and here you see it here, prices hit it right at about, well, 1:30 was close. 2:30 was even closer, but the difference is negligible. If you got off at 1:30, it'd be great. The point is to be patient, to watch where prices go, watch where they put in the intraday high, where they put in the intraday low, and where they go from there. Okay, so that's Tuesday, July 22nd. Let's move forward to Wednesday, July 23rd. Okay, so here we are, Wednesday, July 23rd. Prices are opening prices about an hour before the market opens are coming in well above the predicted trading range. And so let's take it through the day. And remember, Wednesday, the market usually favors prices moving to the upside. Okay, I'm going to stop it right about over here. Prices are opening well above the predicted trading range, okay? So, trading zone, I should say. And so prices opening right over here. Let me continue the video. Okay, stop it right over here. Look what happened at about 10 o'clock. Prices immediately dropped down, dipped down to the calculated resistance at 63.57. 63.57 was resistance. And again, I get these numbers from my Taylor trading calculator and take it off my calculator numbers. It's very easy. I just put the open, high, low, close of each day corresponding to the date. All the numbers are calculated for me, and the resistance, the support, and the range are provided, and I just draw it out on my chart. Really simple. And so the range for Wednesday, July 23rd was 34 points, okay? And so prices at 10 o'clock, they went down and they opened above the trading zone. And so if I clone my trading range to the intraday high, which was put in right over here at the open at 10 o'clock. And I figure, well, if prices are going to traverse the trading zone from the intraday high, let's see where they're going to go. So I'm going to clone it. Okay, right about over here. So this is where prices were likely to go. If I clone my trading zone to the intraday high, the prices are likely to go down to 63.39, okay? But wait, we have to see where prices either take out the high or the low of the day. And I suggest waiting for a half an hour to an hour. I can't tell you which is which. I can't tell you to wait for a half an hour or an hour, but one or the other, the high or the low, is going to be taken out. And so let me continue. So from 10 o'clock, we move forward. Okay, so I didn't want to give you this candle. So couple of things to note here. Again, gap, support, and resistance, trend, time and price, momentum, and candlestick. So trend, do you see a trend developing here in the morning? Well, the trend, I'm going to show you right over here from the low at 10 o'clock. Do you see a trend? Okay. Here's a trend. This candle really, we don't know this. Whatever happened here, I don't know what happened here. But we see a trend develop prior to this candle being formed. Now, that being the case, if the trend is moving to the upside, we can say, well, let's take our trading zone and clone it to the low, which was right about over here. So I'll clone the trading zone to the low. Bring it up to here. Right about there. Okay, there we go. And then continue the day, see where prices went. You really have to be pretty sharp, and you have to have some faith in doing this, okay? All right, so there we go. So prices did take out the high. They did take out the high of the day right over here, and they moved further upwards. So the play of the day was based on the trend and the early prices hitting the resistance of the trading zone. Remember, there's a concept where support becomes resistance, and I think that was at play here. But then again, we have to be patient. We have to see where prices are going when at 9:30, 10 o'clock, where prices take out either the intraday high or low and transpose our trading zone one way or the other. So let's now go to Thursday, July 24th. Okay, here we are again, Thursday, July 24th. Prices just prior to the open, moving toward the top of the trading zone. And let's take it through the day, through the early morning. Prices coming in just at the gap at the previous day's close. And so there was certainly no gap trade. Really haven't been gap trades this week. But on Thursday, July 24th, prices came in right at the gap. And where did they go? Now again, Tuesdays and Thursdays, pretty iffy days. Maybe not trade Tuesdays and Thursdays just because day of the week trading Tuesdays and Thursdays. Maybe set them aside. But prices are not opening anywhere to give us an indication of where they're going to go in relation to the previous day's close. And so we have to see if they're going to obey the trading zone in any way where we can place a trade. Okay, so here we are at 10 o'clock, 10:30, just about 10:30. Okay, an hour after market opens. And so we put in a high. The market quickly moved from the previous day's close up to the trading zone resistance and then bound down to the previous day's close. Pretty narrow range here. Predicted range 42 points. Now, you have to remember, if the trading zone gives you a fairly accurate number of where prices are going to go based on the range, and it does, the trading zone range is very accurate. It's probably the most accurate thing. It is the most accurate thing you're going to see in trading. And so prices are trading here. There are only 4 points between each horizontal line on this chart. Only 4 points. And so the prices have only gone about 10, 12 points, okay, within the first hour of the trade. And they're going between the gap, the previous close, and the trading zone resistance. And so let's move it forward. So again, being a Thursday, prices are trading at a pretty narrow range. We have a 42-point range, so we can expect maybe prices are going to trade 42 points. They've only traded 10, 12 points. So let's see where prices are going to go. Where are we going to trade? Up. Well, prices are moving up. Should we take our trading zone and clone it to the low? Well, let's try to do that. Low is right over here. So it would have been a logical guess to think prices are going to fulfill the 42-point trading zone. And so let's see what prices are going to do to reward us. Okay, prices are coming back down, and they hit the gap again. They hit the gap again, and they go up. And at this point, it's 1 o'clock, and most people are not going to trade at this late in the day. But if you do, we can see a resistance being set up at about 64.15. And so the trading zone is not fulfilling its 42-point range. Let's continue the day. Again, it's Thursday, remember, day of week trading. Prices, again, at about 230, 245, they put in a support, or not a support area. They've hit the trading zone resistance. And so it doesn't look like the prices are going to give us that 42-point range. Now, again, the price is not trading in a 42-point range that's predicted. Leave it alone. Plus, it's Thursday. Leave it alone. Because if you can't use the trading zone to give you, and prices are not trading within the predicted range, leave the prices alone. Remember, nobody knows where prices are going to trade. Prices are going to do what they're going to do. Now, the last part of this video is Friday, July 25th. And I wanted to include the full week so that you can see the trading zone and how it tracks prices throughout the week from Monday through Friday. And as I said, Mondays, Wednesdays, and Fridays give you the best opportunity because prices are a little more predictable. Somehow, that's just the way it is. And you don't have to take my word for it, but I find it to be so. And so prices are coming in just at the bottom of the trading zone, just at the previous day's close, which was at 64.02. Support was at 6,400 and resistance at 64.28, 64.29. So about a 29-30 point predicted range according to the Taylor Trading Calculator. And so let's see how prices tracked the calculator or the trading zone on Friday, July 25th. Now I'm going to stop it right over here, and I want to call your attention to something now. You should wait between a half an hour to an hour to see where prices are going to go and whether they take out the intraday high or low in the first half hour to hour of the day. And so look what happened. Here in the opening candle, the low is 64.02 and prices made a high at 64.09, and they took out that high just prior to 10 o'clock. And then they made another low. They tested this low, but they tested the low that didn't quite take it out. This was 64.0275, and the previous low was 64.02.5. So these lows did not take out the previous low, which was put in on the opening candle. It's not much, only one tick. Prices started at the bottom of the trading zone, and I like it when prices start at the bottom of the trading zone and tend to trade up, or the top of the trading zone and tend to trade down, because those are the sweetest days. And I'm going to show you that, and if you have already read my mind, you're absolutely right. So let's see how the rest of the day went. Again, Friday, July 25th. Okay, so in a 30-point day, if you caught 25 or 20 points of this day based on the trading zone and the prices moving up from the bottom to the top, 20 points, 25 points on one day, nobody is going to be upset at that. So again, Mondays, Wednesdays, and Fridays, one day is going to be the sweetest day. Not every week, not every day, not the complete range all the time, but it's going to be a very effective way of trading. And visually, without the trading zone, and we are looking at a blank chart, and we can only know where the previous day's close was. Of course, we don't need any tools for that. We just look at the previous day's close, and we draw a line on our chart from 9:30 to 4 p.m. All right, and prices, where are they going to go? Who the heck knows where prices are going to go? But we have a guide. And so if we use that guide, and here's the guide, isn't that better than having nothing? All right, just that alone is so powerful, to me at least. And this is the gift that George Taylor gave us back in the 1950s, and using his mathematical model to show where prices are going to go and where prices obey that mathematical model most of the time. All right, we have to transpose it once in a while. There are days where the trading zone would tell us don't even bother trading because it doesn't fit the mathematical model. We know that many times it is going to fit that mathematical model. So we use the model, and we don't trade when the model is not going to really give us the confidence to be successful that day. Okay, so I'm going to stop this video. Okay, it already stopped because it's Friday's over. So again, the tools that I'm talking about, the Taylor calculator is on my site, timelessdollar.com, here, timelessdollar.com. And the tailored trading calculator, right up here on the navigation bar, click this, and you'll go to a page that tells you all about it. And basically, where will the market trade tomorrow? That's all. That's what trading is about. The most important thing that traders need to know is, where is the market going to trade tomorrow? And if you know that, that's the sweetest piece of information any trader could have. I'm not saying it's perfect. I'm not saying you can't lose money in trading. Of course you can lose money in trading. But net, if you have the tools and you know how to apply them, you're going to be successful. So thanks so much for watching. Trade safely, use lots of patience, and I'll see you in my next video. Marv Eisen for Timeless Dollar Trading Academy. Have a great weekend.